Good morning, everybody. Welcome to Friday. Hallelujah. But we're not done yet. Morning, Kay.
Hey. How are you, Ryan?
Yeah, busy, mate. Lots of eyeballs needed today, eh?
Well, actually, only one to just follow the dollar.
Okay, Cyclops. Yeah. So let's get the quick stuff out the way first. The final spaces are up for grabs for the Traders Summit, which is starting today. One of the first interviews you can catch is with Weston Nakamura and Michael Brown of Catch and FX. Weston is pretty hot on all things yen, Bank of Japan. So if you want to catch that, that's one of the first interviews coming up today. I'm hosting that and very much looking forward to that one. Going to have lots to talk about. Have no idea what level dollar yen or any yen's going to be at by the time we get there. But yeah, I'm looking forward to the interview. I've popped the link up there in the chat. There are only a few spaces remaining. It is an online event, so we have to book space in blocks. And we're getting close to filling up one of the blocks now. So if you want to sign up, last chance now. Kicks off later on this afternoon. Right, Mike says BOJ intervention watch party. Yeah, everyone's looking for that, but they don't seem to be in the house as of yet. But I'm going to mention that in a moment. It's not just the Bank of Japan or Ministry of Finance that are looking to intervene as well. We have a story from Reuters sources piece saying that state banks are said to be intervening or were intervening earlier in the $1 onshore at that 725 level. Got the right chart there, yeah, I have. So they said to be intervening there earlier today. That market is now closed. So as you can see, a bit of a line drawn in there. It hasn't had much of an impact. If they're sitting there, you'd expect maybe it to be, knocked right down. It isn't or hasn't. Yeah. Oh, I'm not sharing, am I? Bloody hell. It's Friday. Yeah. Sorry, folks. Right. Everyone see the screen now?
Yep.
Cool. Yeah. So this is the offshore. Sorry, the onshore ones. This is CNY. Bit of a line being drawn there at 725. As you can see there, as I said, hasn't been knocked back too severely or pretty much at all based on that intervention. Usually you might see it, pulled away back to 722, 720, something like that. Same in the one we can trade, which is CNH. Not a real big reaction there. So the market isn't taking that with any real gusto. You may remember when we had the last potential stepping in, we were up here 723 and it got knocked all the way down on possible intervention or banks buying the one, and it got knocked all the way down to the 716s. Not a sniff of that going on here at the moment. I did nibble into a small short in the 726s just on the back of that headline. If it doesn't play ball, I'm probably going to exit that. But if they are going to draw a bit of a line there, and we've still got the party congress going on, then perhaps you want to be on the short side rather than the long side for the moment. Over to Japan. Let's get some of the data out the way first. Core CPI 3%. Matching expectations, but confirming the jump over last month. Headline CPI unchanged at 3%. So Japan inflation still on the rise. This is something they still expect to be in the transitory mode. We even had Kuroda this morning saying that the economy is recovering, but will continue with their monetary policy stance, and that CPI is likely to slow after year end. It all sounds like a bit of a can kick exercise at the moment, trying to pump the calendar down, because what happens if CPI doesn't slow after we cross the end of the year, if it continues accelerating into the early part of the new year? There's huge pressure coming in on the Bank of Japan already. It's going to increase markedly if inflation doesn't conform to their target. And it's going to be a huge problem. And it's funny, I was saying to Kay last night, doing my questions and my points for the interview with Weston and Michael later, I was writing down some of the things, to talk about concerning Japan. And when you see them on paper and see them, in black and white, you can't help think, it comes home to roost how really screwed they are. The central bank owns over half their own bond market. So, a 2 pip move in rates is going to cream them, let alone if they have to start hiking rates and, chasing inflation and changing monetary policy and even widening the band, 25 pips either side. That's still a huge cruncher just for the bond holdings, let alone everything else that's going on. It's scary. And I think we all realize how scary it is, but we're all maybe a bit ignorant of it. And maybe we sort of, that's not going to happen. We'll brush it under the carpet and just deal with it day to day. But anyway, on to the intervention front. Now, we've had all the usual suspects out speaking. Suzuki, weekend has merits and demerits. Excess volatility by speculative trading is unacceptable. His last comment, one of his last comments today was, we are facing speculators in the market severely. I don't know how much higher he can go on the rhetoric before they decide to push the button. The only thing they may be watching is what is driving this move. And this move is pretty much being driven by yields, US yields in particular. They keep creeping up, keep creeping higher. It doesn't matter which one you look at. Short end has been moving up as well. So dollar yen isn't fully out on its own like we've seen it over the last few days. So there are fundamental reasons why dollar yen is moving up that may be staying their hand. But even so, that comment that they are facing speculators severely in the market is pretty much a last line in the sand. So we should be on heightened intervention watch. What do you make of it, Kay? Are they holding off on what's going on in yields, or are they just scared to act?
Yeah, they see what's happening in yields. They see what's happening in the dollar. They see that there's a risk of the treasury market also getting a little bit out of hands. We'll talk about that a bit later. But anyway, both Kuroda and the government don't seem to want to stop it yet. Kuroda just repeated what he has been saying, that he thinks inflation will come back down. The economy is doing a little bit better. Still need to support the economy. So for the time being, he doesn't seem to be changing anything. Now the BOJ is next week. Are we going to get a surprise move? We had one already 6 years ago in Davos. So can we have now a surprise to the other side? Never say never, but for the time being, he doesn't seem to want to change anything. So MOF is really fighting against everything. They're fighting against higher yields. They're fighting against not only a higher dollar, but the yields, as we see in Europe, are also rising. Euro yen is close, if not close to its highs as well. And all the rest of the yen crosses are going up as well, because the yields are going up everywhere. So it's a fight on all fronts, and not only versus other currencies, but versus their own internals, because the government is putting stimulus package after stimulus package. And the Bank of Japan is still holding YCC to sponsor all those packages. So yeah, it's, again, if they would intervene on their own right here and now, they can put it again 4 or 5 big figures lower on the scare of interventions and people getting washed out of positions on stops and things, and you name it. People are trying to think it's the absolute top, and then I reckon that we have the same scenario. The end of the interventions, stabilize a little bit, and then we go the other way around again. It's a bit as I've been saying for a long time already, I mean, it's a Japanese problem, but it's not only a Japanese problem. It's everywhere now. And for as long as they are going to fight the fight alone, they won't succeed, I think.
No, I make you right.
And as for the level of alert on interventions, we are at top alert. There's absolutely no question about it. There is no doubt that we are on top level alert for interventions. But do they intervene at 151, or do they intervene at the famous 200-300 points again? The low of today is around 150, so I guess 152, 153, somewhere there. If we are to see it today or on Monday, it's that could be it. Now it's Friday afternoon, and again, I'm still a dollar bull, and I must say that I'm starting to get a little bit nervous by the speed of the rising yields and the worries surrounding U.S. Treasuries. Lots of articles about forced selling of Treasuries, and I'm not going to say it's happening, and I can't be short dollars right now, but we need to be ourselves a little bit in some state of alert to see if we are not getting closer to some sort of calming moves in the Treasury market. So yeah, I can't be short dollars, but it's a bit tough to just keep blindly long as well. So it's a bit of a difficult call right here and now.
Yeah. Now the BOJ did some more unscheduled bond buying overnight and increased the regular amounts they're doing anyway. As Kay mentioned, the government is set to announce this 20 trillion economic package, this economic spending they're going to be putting in place. I'm going to ask you another question. I'm just going to put up, here's what the BOJ's position or Japan's position is at the moment. They are pretty much trying to bail water out of the sea. So, Kay, the question, we're talking intervention. Will they try? Do you think the BOJ might be advising Suzuki to keep the powder dry until next week's BOJ? Because if they intervene now and the market's already putting pressure on yields in Japan and everything, and we get the BOJ meeting and everything is the same as same old, aren't they going to waste money intervening now rather than saving it until then?
Yeah, I think you make a very, very valid point. We could have exactly the same situation as during the last BOJ meeting. If nothing happens on the dollar front in between now and then, we might have exactly the same scenario. The question is, where are we going to see interventions from? Do you want to be short dollar yen here, betting on intervention, and we can see 153, 154 before even the BOJ? Or are we just waiting and seeing? I'm going to wait and see personally, and I'm not going to. People know that my stabs are still long dollars and sometimes a bit dollar yen, but then 30, 40 points later I'm out of it. The interesting one is that the vols are still very high, but I'm going to have a look at perhaps do something. If we get this other one or two big figures acceleration to the top side, I might try to buy like some relatively short-term put just below 150 or so, if it's not too expensive. Just to have something when for if they do something. Yeah, but I think you make a very valid point of saying BOJ meeting, and we intervene after that. And just to add what I've been saying already a few times, it's Kuroda's last year. So the base idea is that he's going to try to fight everything until March, but he has already surprised in the past. And if the pressure is such on the yen that they in talks with the MOF, they do think that something is out of whack fundamentally, the yen is really too weak versus everything, they might surprise us and just perhaps widen the YCC a bit, go up to 0.5% on the 10 years, but that's only going to be a temporary plaster, right?
Yeah, and that's the thing with all these measures, intervention and stuff. It's usually only a temporary measure. It doesn't last. I mean, look where we are from the last intervention. But again, traders have got to understand what they're trying to do here. They're not picking levels. They are trying to take out the volatility, stop the moves that are not fundamentally driven, that are all speculatively driven in their eyes. They did it with success on the last intervention. Dollar yen did nothing for a week after that. That's always their aim until they say differently. That needs to be respected. They're not picking levels here. If they ever do pick a level, well, then that changes the picture. Right, so just moving on to some of the other items on the card. We had Fed's Harker out, and some of the market have been leading this last move in bonds, or this dollar bid, to comments he said, which was that the Fed are going to have to keep hiking for a while, and that the rate is likely to be well above 4% by year end. He also said there's disappointing progress made on lowering inflation, and they can stop hikes sometime in 2023 and then take stock of the impact. So he's a little bit alongside what we heard from Bullard in terms of he wants to get rates up, then become data dependent. It seems Harker wants to do the same, get rates up, then see where the economy is after that. So it's a little bit of a change in language from these guys, and I think that's what's edging the market into this sort of next leg up in yields and the dollar. My view of yields at the moment is that they are reflecting still where the market expects, where the Fed expects rates to top out, somewhere in that 4 to 5% area. I think it becomes an issue, or the market is getting a little bit too extreme if we start seeing US yield breaking, say 5%, particularly in the short terms, 2s and 5s, maybe something like that. If that starts happening, that's when I'm going to expect the Fed to maybe start coming out with comments to say, easy, you're going a little bit too far here. But of course, if the data changes, if CPI still comes in strong, if the core keeps rising, if the headline halts its slide and turns around again, then we've every chance of looking at setting a higher terminal rate than where we are now. And then you're going to see yield, really rocketing up again. So it's really factoring in, if US interest rates are getting to 4 or 5%, that's naturally where US bond yields are going to go to. And the fact that Fed members are continually coming out and saying, even if we get to this top, we're staying at this top for a while. I think there's still some in the market who are still, call them the pivoters, whatever you want to call them, who still don't believe the Fed are going to get up there and stay up there. And that's bringing this additional pressure into yields. But unless something changes to make us think that rates could go even higher than 5%, I think if yields get up to that 4.5%, 5% mark, they're going to be happy, the Fed. Only if we break above that are we going to get potential issues. Now, looking at some of the data we got yesterday, let's get on the right calendar. A couple of things. We had the Philly Fed out yesterday, manufacturing data. Not as soft as last month, but still negative. But there were uplifts for employment, which jumped to 28.5 from 12, and for the inflation metric, the prices paid, up to 36.3 from 29.8. Now, these had been sliding a bit, so this is a bounce rather than a trend higher. But those are the sorts of numbers the Fed don't want to see. They want to see inflation pressures falling. They want to see employment becoming softer. So again, we've got data here that isn't going the way the Fed wants it to go. And that falls into what Harker said about disappointing progress made at lowering inflation. They're not seeing it yet. This is only a small indicator, granted, but that's what the market's going to be looking at and measuring into the others. Existing home sales were a slight miss there, or rather slightly lower on last month. Prices dropped minimal, 5k on the month, still up, well up year on year. So nothing from that market or that data point to suggest that the housing market is in collapse, like we saw on the NHAB data earlier this week. So again, data not really conforming to what the Fed want to see. And while that remains the case, they're going to keep hiking. Into today, oh, come on, wobbling around. We had UK retail sales out as well. No surprise to see some negative numbers there. No real impact from everything that happened with Her Majesty, those bank holidays. Could be playing into those numbers, you know, as the shop shut on that particular day. But retail sales, you know, not looking really good. And that's going to be some more economic weakness for the UK to deal with, and something for the Bank of England to keep an eye on going into their rate meeting early November. We did get, I don't look at a lot of earnings, but Whirlpool is one that sometimes keep an eye out for, because it can be a bit of an insight into the US consumer. Obviously, they're big on white goods and the likes. Revenues were 4.78 billion versus 5.15 billion expected. So down on revenues. I wouldn't call it a massive miss. Stockies might call it a massive miss. But if we start seeing revenues really cratering and profits really cratering in firms like this, that's when you start to really understand that the consumer's in trouble. Obviously, these are quarterly numbers, so you know, a lot of water goes under the bridge before you hear them. But you pick certain stocks in certain sectors that can be a bit of a guide to what's happening underneath. So that was one I picked out yesterday. On to just another bit of news. Trafigura, a big commodities trading house, said that copper stocks have fallen to dangerously low levels, and stocks are roughly running at around 4.9 days of global consumption, and expected to fall to 2.7 days of global consumption. Usually those numbers run in the weeks. So a bit of tightening coming on into copper markets, and it's something that Dale and Blake looked at on F.A.C.E. Let's see if I've got copper up here. Have I got copper up here? No, I haven't. Okay, let's have a quick look. What's the copper market on this thing, Kay? Let's just look at.
Yeah, I guess you're on it.
No, that's not it.
Yeah, it's there.
Oh, the HG futures, COMEX. Here we go. So obviously we've got two things going on here. We've got the global recession issues hitting prices, supply issues, everything that's been going on. So supply and demand is obviously a big picture. But for copper, I had seen it running a tiny bit yesterday, maybe coming on the back of this news, or 19th, 20th coming on the back of this news. If you're looking at currencies like the Aussie dollar, this is the sort of news you want to be looking at, because they are, Aussie dollar is obviously a heavily commodity-led currency. That may be one of the reasons why it's trying to hold up a bit better than other dollar pairs at the moment. You know, this is quite a big firm who's coming out with this news. You could maybe level the case that perhaps they're talking their own book. You can never rule it out. But news like that is something you want to pay attention to when you're trading commodity currencies. So that was the news on copper. Over to the UK. We've got the contest starting for the new Prime Minister, however long he or she may last this time. Just to give you a quick rundown, we could have an idea of who it is by Monday afternoon. There's going to be a maximum of 3 candidates allowed. They will have to reach 100 backing threshold. So MPs in the party will have to back them at least by 100 to push them forward into the contest. Depending on how many get backed by that magic 100 number, It will then go through to the members, the Conservative members, who will vote. So it's the MPs who are going to be backing their nominations, and then the members will vote on those. If there's 3 people in the hat, we'll get 2 votes on Monday, to whittle down to 2, then whittle down to 1. If there's only 2 nominations going through, then 1 online vote. If there's only 1 person who meets the 100-person threshold, they will automatically go through to be decided on whether to become PM. Now, the surprise that came out yesterday was that Boris is apparently back in the running. He hasn't put himself forward. In fact, unless something's changed this morning, none of the people have put themselves forward officially. Sorry? No one has actually put themselves forward officially.
To stand for the post again.
It's what, sorry?
Did he not say that he was ready to stand for the job again yesterday?
There's been comments out, but no one has officially, I don't believe, put their names down. So they've all, via their sources, said they're interested and that sort of thing. But I think no one has actually come out and said, "Yep, I am standing." So Conservative MPs are still putting forward their views on who they want to be in the hot seat. But as far as I'm aware, no one's officially come out and said it. Now, there's a handy spreadsheet being run to show who is being backed and their numbers. This is not official. This is run by a political website, a political commentary website, Guido Fawkes, some of you may know about it. They know a lot of MPs. They're very in the know, so they will be phoning up all their contacts, and indeed people will be phoning them to give their numbers. So at the moment, let's have a little refresh, see if that's changed. Boris was well out in front last night, and but Sunak's oh, there we go, it's turned red, so I'm mistaken now. Sunak, Johnson and Mordaunt have officially declared their intention now, so that's just changed in the last few minutes. So as you can see there, Rishi has 53 backers, just taken the lead. Boris Johnson 52, Penny Mordaunt 19. 100 is the magic mark. At the moment, no one else has set their interest. If that remains the way and both Rishi and Johnson get to that 100 level, then they will go through to the nominations. I don't know what happens if Boris gets in again. It was his own party who forced him out before getting Truss in. There's already people talking about defecting to Labour if he gets in, and some will say they'll do that even if he gets nominated. So there's still big fractions in the party, or fractures in the party. I think personally, if Boris comes in, we'll be heading to a general election not long after. He is facing a parliamentary inquiry over his COVID antics and the stuff that got him booted out in the first place. We could have a situation where if he's found guilty of those, and it's an internal investigation, he will likely get a 10-day ban from Parliament, which means that he would potentially have to give up his seat for election. Now, as far as I'm aware, you can't be the Prime Minister and not be an MP. If he puts his seat up for election, a by-election, and he loses, the mandate potentially is that he can't be PM anyway. So we get a PM, he gets investigated, he found guilty, he gets banned, he has a by-election, he loses his seat, and then he can't be PM anymore. Now, I'm sure there's plenty of rules and regulations around it that they can use and strings they can pull. But we really are in crazy zone here. So if he becomes PM, gets hoofed because of this investigation, we are heading for a general election. There's no two ways about it. And I wouldn't be surprised if we're heading for a general election anyway, whatever happens. But that's what's the situation we're in, and I think I'm in some sort of fantasy world when I hear myself saying it and explaining it. But that's what politics is for you. Right, let's look at some prices, please. Okay, I might hand it over to you for the rest of the show. My head is swimming here.
Yeah, I can imagine, mate. I can imagine. You should get a Boris wig. Hey, it would be great to do the Traders Summit today.
Yeah, I'll turn up with Michael and Weston with a Boris wig on.
Exactly.
And say, yeah, I'm your new PM host. Right, I'm gonna just repeat a chart that I keep showing here. For me, the tech levels are all about these big fibs at the moment. I like the big long-term fibs. They are the areas that can potentially give good risk reward for trading, although you have to bear in mind the price action that's going on at the time. For me, on the technical front, this 38.2 at 152.77, the big fib from way back in 1982, that's a potential stall point. The next one from that is up at the 160s, which comes in again, looking all the way back to the 90s for that prior high. Similar to what we saw with the 98 high, which, you know, held for a little bit, for 5 minutes, if you like, but enough to give potential trades off of. So these are the big, strong levels we need to be looking at. There was one here, 150s and a halves. So you have to go back to the old stuff. I know Kay looks at extensions and things like that, which I don't look at. I prefer the long-term stuff. So for dollar yen, you know, it really is an open door here on where we can go. We're finding resistance into 151, big figure, as we speak. Really got to take it by a big figure and more the long-term techs. Elsewhere, we're seeing the dollar moving. Euro dollar could be heading back towards the lows. If it gets under 97, then there's every opportunity. Let me get my other chart up. Might be a bit more messier, he says. Let's go into a daily, see if that cleans up a bit. So 96 is going to be a bit of a line there. It's where we came back above after that move down to the 95s. Couldn't sustain a move underneath it. That's your case for the bottom or temporary bottom that we saw in place there. If we get back down to there, I'm keeping an eye on that trend line, although it is, you know, really short term, just marking the move per se. A move under 97 is going to look pretty weak. And could mean we're heading for another leg lower based on all the yield moves that we're seeing. If we don't get under that 97 level, if we can't get under that 97 level, it's going to solidify the case for seeing more of a longer term bottom developing. Doesn't mean we're going to be suddenly heading up to parity or above. It just means further bricks in the wall, if you like, that support is going to be building around the area, and we're not ready or not willing to go much further lower. So we're in a bit of a pause phase here, and the same as I've been showing often this week, same for Aussie dollar. Let's just bring it down a bit shorter. Let's go to an hourly. So even in the face of all this dollar strength, not doing an awful lot in the Aussie dollar. As I say, maybe some bit of tailwind there from the copper news. We did try and have a little break of this 45.50 area. Couldn't do it. So all the way back down, we've come again. Into 62s is going to be a bit of a similar situation to what I'm talking about with euro dollar. If we get down there and hold, it's going to really cement the fact that we might have a bottom in place. Under there and a test of the lows, then it could be we're on for another leg lower. As Kay's been saying, it's just about range trading at the moment, as some of you guys and girls have been saying in the chat room yesterday. Ranges is what we're all about in some of these pairs. So if we're seeing these moves in yields, if we're seeing these moves in the dollar yen, but it's not being reflected elsewhere, that tells its own story. Kay, do you want to take your little chart show? Let's call it that.
Yeah, I can do. I will. Sorry, I'm going to do it. Yeah, I can do so. I just wanted to let me go on to the right screen first of all. All right, you guys see the euro dollar?
Yep.
All right. Just one thing that I want to mention before I'm going to dive into a couple of charts. I'm not going to show too many today, but yeah, we were talking this morning, and really, I would advise people who are not yet in our community to do so, because we are talking really about not only beautiful pictures with a lot of lines. I know my charts look very, very sexy, but it's not only about pictures all the time. The thing, we talk a lot about fundamentals as well in our room, and this morning we had in our Flowonomics room a very, very interesting discussion about what's going on into the treasury market, and all those articles saying that there may be more forced U.S. Treasury selling going through. I think the market is a bit scared of what might happen, and it's all about the dollars right now. And so we were talking about that. I'm getting a little nervous about what's happening in the Treasury market right now. As I was saying already for many times, I'm still a dollar bull. I think there's a real chance of a squeeze into year end, but perhaps some of our Trader Summit guests are going to prove me or tell me that I'm completely wrong. We'll see about that. But in the meantime, I'm getting a little nervous about everything that's going on. And although basically, if it would be an orderly move that we see now in those yields, these are the 10-year dollar yields absolutely rocketing now, but they are rocketing elsewhere as well. The European yields are also moving a lot higher. But if it would be on an orderly, in an orderly fashion, I would say, yeah, the dollar is really great, and even if we stop and we cap or we peak or we top or however you want to call it, I'd still be bullish dollars, because it's not because they top or peak or stop at a certain level that all of a sudden, first of all, they will reverse, and secondly, it doesn't mean that all of a sudden we need to sell dollars. There's going to be a bit of short-term moves, perhaps on the back of it, but it's all going to depend what's happening in the other yields in the other countries, for one, and for two. Most of the currencies in most of the pairs, you're still going to get paid to be long dollars if the carry is something that is of interest to people. So I just wanted to share that, and also telling people that we are talking a lot about fundamentals and what are the drivers in our chat rooms, and it's really me having been in the markets for over 40 years now. To me, it's still a very interesting community to be in, because I'm learning a lot nearly every day, and I'm especially learning about the psychology of people, how people think, how they come to build a position or build a view on when or how and why to take a position. So I just wanted to say that, because trading at home can be a very lonely business, and me having sat in dealing rooms of up to 1,000 people, where all the information just comes to you without needing to do too much, hearing from colleagues, hearing the buzz in the market, hearing from the bookies, hearing from the sales, hearing from the clients, day in, day out. It's and then sitting at home is a big difference, and a community like ForexAnalytix is really helping me as well to keep some sanity in my thinking. So hey, that's it. I just wanted to say that, because it's very important, and we talk about a lot of stuff in there as well. All right, over to the charts. Yeah, so what Ryan was saying, through this prior low here, 97, figure 15, we could have a look here. We are in a triangle. We are going into the end of the week. It could be that we somewhere going to go out of here horizontally. I just want to show this quickly while it's, wow, really starting to pour down here on the beautiful UK coast. Actually, yield differentials This is the short-term German and 2-year, the 2-year German and US. As we can actually see, the yield differentials are tightening a little bit today as well. So that to me explains why when we see the dollar steadily moving higher versus a lot of currencies, especially the weaker ones like sterling and the yen and CNH right now. The euro is relatively stable, and we see those moves higher in some of the euro crosses. This is the explanation. So, and this is bringing me back to the euro dollar. Why this thing is like the triangle is tightening? Of course, we have rejected spikes because of the strength of the dollar, but we are not making new lows, and I think that is due to those interest rate differentials right here and now. So that's an interesting thing to follow, which to me, since I'm still positively oriented versus the dollar, still puts me in a sell the rallies camp. But I do take profits every time it comes lower, and I'm respecting the fact that it's not really coming down or crashing away like the rest of the currencies may be. Sterling. Okay, we know about sterling's problems. We know about the political side. That is, of course, the major factor or the driver of the sterling and the cable. And the other side is the dollar strength. So we've seen this rejection around 115. Then we've seen the rejection around this newly formed trend line. We've seen it again. Yesterday we had the spike, and then we're coming lower again. I'm going to, if you look at those spikes, not really this one here, but if you look at this initial spike, this spike, look at the times, yeah? It's a 4-hour chart. I should perhaps put it on the 1 hour, but it's good enough. Look at the time, yeah? That's UK or GMT. Here, look at the time. Here, look at the time. Every time we do the spikes, it's around the London fixing. So that's something to keep an eye on. And every time those fixings have been rejected, those spikes have been rejected. So that's something that I am always keeping a very close eye on to see what's happening around the London 4 p.m. So, but I'm still bearish for now. But I'm the same thing as in the rest of the dollar pairs. Now starting to get a little bit cautious. We also need to build in a bit of caution in regards to what's going to happen, who's going to be chosen to be the next prime minister over here. So this is one that, barring a few steps, I'm not having anything long-term in, but I would be a bit concerned if we break back below the 110.25. And this one here comes from a very, very longer term one. No, it's the red one. Sorry about it, guys. The red one here. In the low 109s, I think this is where we also bounced from after the other big leg lower. I think this is going to be a very, very important level as well. The low 109s. I'm going to compare it a little bit like the 99 we had in the euro dollar. Fight for parity. This is probably the fight for 110. If you get back below 109, I don't know what's going to stop it to get back to the former lows, but I would really pay very, very close attention to this low 109 in the cable. Dollar yen, well, not a lot to say really. We were talking in the chat room about and Ryan was also looking at his fibs and levels and yeah, the extensions. Call it 153s. The people have stuff in the 152s. There's stuff going on in the 156s, but we really have to look at what's happening in the yen from a speed perspective. Yes, whatever happens in Japan on the fundamental side right now, only the MOF can stop a temporary stop this yen weakness. And I'm gonna say yen weakness because it's not only dollar yen strength, right? We are at highs in the euro yen. We are at despite sterling being under pressure, we are still at relatively decent levels in sterling yen as well, and all the yen crosses. So I'd say watch out. And to me, really, and I don't like those kind of statements, but the only thing that's going to stop dollar yen is a turn in the dollar, really. But for the short term, we can't rule out interventions, and really short term, watch 149.95 figure. I'd say it's a bit of a psychological level at 150. If we get back below, why not revisit, do a quick revisit of 148s, 147s, if there would be some corrective activity on the dollar. Of course, if it's interventions, I think that it's possible to go back to 145s if it's the same amplitude of the prior interventions, but there's a lot of ifs there. Yesterday, dollar Canada yesterday, we had this move lower from the wedge top. We had this move lower. We fell a bit short of the support of the wedge, but we stopped right on the prior low in the dollar Canada, give and take 5-10 points, and now we're already back and broken above, and we retested the 137.65.70. This is now the support zone, 136, call it 55.70 somewhere, but it looks pretty perky in line with the rest of the dollars. The one that I'm still keeping an eye on, and I'm regularly involved in, is this one, the Euro Canada. As long as oil doesn't really tank, I consider the Canada as well to be part of the Americas block, and this one, for as long as we don't sustainably break above 135.5, 135.70, I'm still trying to catch tops and play small dips, but we need to respect this 133.90 figure as well. So whenever you want to play anything to that side, respect those levels, right? And then really the last one, I'm going this dollar rand the other day, so one before last. It's firmly inside this channel, rejected it, and really we are spiking. We're spiking up quite rapidly again. Keep a close eye out on if ever we get back to the 1858. It's the end of the week, Friday. Anything can happen. If this flies through, we might have a look at 18.75, and then the other America currency. We're back under the 62.60 zone on the Euromex. It's my long-term position, and the funny thing is that we capped here around this 200 MA on the 4 hours. And we never actually managed to get to retest 90s like we did before. So to me, that's still, still long-term bearish on this one, and the carry is still very good. And with that, I'm giving it back to you, Ryan.
Thank you very much, sir. Thank you very much. Quick look at gold, actually, while we're here, because we've had another test of the fib. Down here, I'll just put that out so you can see what I'm talking about. So the fib going back to July 2018, that low there, that swing up at this 50 fib 1617. We had one test a few days ago, or a couple of weeks ago, and we've just had another one, and it's holding again. So a bit of a level developing there for any gold bugs. I'm not in anything at the moment. There could be a case for going with a break trade if we do break that. I know obviously Stel's been talking about if we do get a breakdown, he's expecting the price to move well into the 15s. On the upside, this bit of a pivoty level at the 1640s, as you can see, was a support area, resistance, support, resistance. You know the story. Did have a little bit of a fake break above. Couldn't get up to the 50s, and then we got the test down to this fib level. So for now, if you're in looking at gold, that's becoming a bit of a big level to look at. When you get a level that, you know, stands a test of time over a good period, it becomes something a bit more than something that happens over a couple of days. So keep an eye on there. If you're long in, that's where you want to be balancing your risk against sort of under 15s. Then we're heading towards the 1600 level at least. And I also want to look at euro sterling. This is still being blown around by what's going on in the UK more than the fundamentals, which for me makes it a bit more difficult to trade, because you can be up 50 one day, down 50 the next day. I'm looking at sticking to the wider ranges on this, see what happens if we get to 88s. From the political point of view, if Sunak comes on board, he's still likely to be the most market friendly. But for me, it's going to be about how much or how he passes the vote. If he gets strong representation backing from the majority of MPs, then I think it's going to be more positive for the pound. If it's the case that, yep, he's just sneaked through, but there are plenty of MPs against him, we're going to have the same situation as we had with Truss. So any positivity that we get from him as a person coming in could be undermined by the political shenanigans we've just seen over the last week or so, or 44 days, as it was with Liz Truss. So for euro sterling, you know, it's twofold. If he swings through, then I'd expect this to carry on down. We know the Bank of England are going to keep on hiking, potentially harder and higher than the ECB, so that may still keep some divergence in the trade. I would still rather play this from the long side. So if I do see any decent dips, maybe something's, you know, spectacular down to the 85s, I'm going to be looking at picking up longs in this one. And just to finish off,
Ryan.
Yeah.
Yeah, can I ask you something? Because I don't think, and I know we've been going on for a while, but I just want to ask you something from, well, if ever, like, I don't know what the chances are, but if ever Boris Johnson is back, what do you think the impact is going to be on the pound? Just in a couple of words, if you know what it would be.
Yeah, I mean, obviously I spoke about how I think it's crazy that he's in the mix anyway. I think based on what could happen after he takes the hot seat, it's going to be negative, because he could get in and then 10 minutes later he could be out again, and that's not going to be good. And the market is just going to get the real hump with everything to do with the UK. Investors are not going to know what they're doing. The initial reaction, I really don't know. If we get headline Monday, Boris is to become the new PM, I don't know what the pound does. Well, I really don't know, to be honest.
I have this vague idea that since he's known to the markets, if ever the unthinkable happens and he takes the seat, I would perhaps say the initial reaction is turning higher.
It could be. You could well be right, mate. And he does know how to win an election. You know, that's been proven.
And he does have the how shall I say? He does have the experience to talk to foreign leaders and things like that as well. I don't know. It's just a crazy thought, but
the whole thing's crazy, because then you look at it and think, well, here's the guy who's got in after his own MPs got him out. I mean, the opposition parties are going bonkers about it anyway. And the public, what are the public going to say? You know, a lot of the public wanted him out, and now he's back in again. You know, even if he comes in, I can't see it ending well.
Okay.
But I don't know what happens. It's crazy. It's crazy. The whole situation is crazy, and to be honest, I don't know how to trade it unless there's actual strong definitives like Sunak gets backed by 300 plus MPs. That would be a bullish signal for me. If he's only backed by 150 MPs, I can't see us being in any different situation to Truss. But, you know, we've come through Brexit referendum. We came through Brexit itself. We've come through everything else. And, you know, you think you've got a handle on British politics, and something comes up out of left field that you just don't know. And this is one of those moments. I can't wait for the bloody weekend. Gavin, I know you're in the room. If you want to come and have a chat about dollar Swiss, please come and do so. Stick a couple of charts on, let us know what you're looking at. I did have a quick look at the charts, but time is getting on. So we'll let it go for today. As always, I hope you've had a great week, everybody. Please have a great rest of your day. Remember, Fridays are for beer pips. So that's what you should be trading for. If you've had a good week, don't go and spoil it on the last day. Don't forget to join us on Traders Summit. Lots going on. There's no weekend for me. We're going to be busy. I know Kay's going to be busy as well. Got some great interviews too, so don't forget that. And hopefully we shall see you all again on Monday. Thank you, Kay, for all your input to the flow show as usual. And everyone else, have a great day. Have a great weekend.
Have a great weekend and join us on the Traders Summit. Bye-bye.